જય સ્વામિનારાયણ ફ્રેન્ડ્સ. સંદીપ પંડ્યા કોમર્સ ક્લાસમાંથી હું છું આનંદ સોની. આજે ક્લોઝિંગ સ્ટોક રિલેટેડ કેટલાક ઇમ્પોર્ટન્ટ એડજસ્ટમેન્ટ લઈને આવ્યો છું. સ્ટુડન્ટ 11thનો હોય કે 12thનો હોય, જ્યારે ફાઇનલ એકાઉન્ટનો ક્વેશ્ચન સોલ્વ કરતો ત્યારે એક એડજસ્ટમેન્ટ એને ઓલવેઝ આવતું હોય છે કે સર ક્લોઝિંગ સ્ટોક. ક્લોઝિંગ સ્ટોકનું સિમ્પલી એને આપ્યું હોય તો પ્રોબ્લેમ નહીં આવતું, બટ જ્યારે કેલ્ક્યુલેશન્સ આવતું હોય ત્યારે એને પ્રોબ્લેમ્સ થાય છે. તો આજે ટોટલ 12 ટ્રાન્ઝેક્શન લઈને આવ્યો છું, બધા જ કેલ્ક્યુલેટિવ છે. એના ઇમ્પોર્ટન્ટ કેલ્ક્યુલેશન્સ કેવી રીતે થાય એ ડિટેલમાં તમને હું બતાવવાનો છું, એની ઇફેક્ટ કેવી રીતે અપાય એ પણ બતાવવાનો છું. સો લેટ સ્ટાર્ટ વન બાય વન વિથ ટ્રાન્ઝેક્શન્સ. ટોટલ અહીં 12 ટ્રાન્ઝેક્શન્સ આપ્યા છે, એ વન બાય વન કરીને હું એક્સપ્લેન કરતો જઈશ. ક્લોઝિંગ સ્ટોકનું કેલ્ક્યુલેશન કરતા પહેલા એની ઇફેક્ટ થોડી આપણે વિચારી લઈએ, જેથી કરીને 12 ટ્રાન્ઝેક્શનમાં આપણે ટેબલ ડ્રો કરવાના પડે. ફર્સ્ટ ઓફ ઓલ એનું એક સેન્ટેન્સ યાદ રાખવાનું. ક્લોઝિંગ સ્ટોક ઇઝ અ સ્ટોક which always recorded at cost price or market price, whichever is less. Once again, closing stock is a stock which always recorded at cost price or a market price, whichever is less. So keep in your mind, whenever you make a calculation, cost price and market price will be compared. Done? So after once you decide whichever value is less, then pass the journal entry and then post it. So what journal entry we should pass? Let me show you here. So basically the journal entry will be closing stock account debit to trading account. Whichever value is less, cost price or market price. Now as we know, closing stock is assets for us, hence we shall show balance sheet, asset side. Here we shall write this is balance sheet, and here we shall write closing stock. And second effect we shall show on trading account credit side, that we shall write by closing stock account. Is it clear? So let's start one by one. As you can read, the closing stock is of rupees 8,000 shown as on 31st March 2015. Final account are ended on 31st March 2015. Sir, no other information are given. So whenever no other information are given, consider the whatever value given, that is by rupees 8,000. So without any calculation, we shall show this 8,000 on balance sheet asset side and trading account credit side. Done? Now, closing stock is of rupees 1,10,000, out of which market value of 50% stock is 10% more. See, whenever the value is 10% more, we usually do not require a calculation. But for the sake of simplicity, I am explaining here. What is the value of stock? That is 1,10,000. So let me write here 1,10,000 and have a two part, that is 50-50%. So 50% of 1,10,000, that will be rupees 55,000. And here will be rupees 55,000. 50% stock has market value 10% more. So this is our cost price. We sell at 10% value. So 10% value is 5,500. So whenever we add it, we shall obtain 60,500. And this will be our market price. As we know, closing stock always recorded at cost price or market price, whichever is less. So out of this value, cost price is less and no other information given regarding this 50% value. So without any calculation, we can directly write closing stock at rupees 1,10,000. Where shall we write? Balance sheet asset side and trading account credit side. Fine. Let's move to the next one. That is stock as on 31st March 2015 is of rupees 2 lakhs, out of which market value of 30% stock is 20% more and market value of 50% stock is less by 10%. Whereas remaining stock need the repairing expense of rupees 2,000. So sir, we are confused. Look at here. What is the overall value of stock? That is 2 lakhs, out of which market value of 30% stock. So let our first part 30%. Now this 30% is of rupees 2 lakhs. So 2 lakhs into 30 by 100, we shall obviously obtain rupees 60,000. So this 60,000 is our cost price. So which is 20% more. So let me add here 20%. So 20% of not 2 lakhs, rather of 60,000. So that will be 12,000. So by adding it, we shall obtain 72,000, and this 72,000 is a market price. Again, market value of 50% stock. So 50% stock is to 50% of 2 lakhs, that will be 1 lakh. So which is less by 10%? So we shall deduct by 10%, that is 10,000. So what value shall we obtain? 90,000. So again we know cost price is 1 lakh and market price is 90,000. Now whereas remaining stock, sir, what will be the remaining stock? See, 2 lakhs, 30%, that is 60,000. 2 lakhs, then 1 lakh second part. So 1 lakh plus 60,000, that will be 1 lakh 60,000. When we deduct 1 lakh 60 from 2 lakhs, what value shall we obtain? That is 40,000. So 40,000 stock need a repairing expense of 2,000, and always deduct the repairing expense from these stocks, that will be 2,000. So what will be our market price? 38,000. Sir, as you told us, we shall compare cost price and market price, whichever is less. Which value is less? Obviously 60,000. Which value is less? Obviously 90,000. Which value is less? 38,000. By making total of these three items, that is 60,000 plus 90,000 and plus 38,000, we shall obtain the final value of closing stock, and this value will be recorded at balance sheet asset side and trading account credit side. Hope આ બધું તમને સમજાઈ રહ્યું છે. એગ્રી? ફાઇન. વન બાય વન કેલ્ક્યુલેશન્સ આપણે લેતા જઈએ છીએ. See the next one. Closing stock is of rupees 2,01,000, which included in stationery stock of rupees 1,000. Market value of goods of rupees 20,000, out of which good stock is less by 20%. Sir, how we shall calculate? See, whenever you have been given two kind of information, one is about the stock of goods and other about the stationery stock. So always bifurcate it. Always write here good stock, and second one will be stationery stock. So what value of stationery stock is given? 1,000. And what about the other? So when we deduct 1,000 from the 2 lakhs, we shall obtain 2 lakhs. So do we need to give the effect of both this one? Obviously yes, but let me explain later on. So market value of 20% goods. So let's have a part of these 20,000 and the other part will be 1,80,000. So what they are telling here, out of which good stock is less by 20%. So we shall deduct 20%. So 20% of 20,000, that will be 4,000, and finally we shall obtain 16,000. So this is our cost price and this is our market price, and sir, no other information given regarding this one. So don't worry, consider that value. Whatever value is less, which value is less? 16,000. So sir, by what value we shall write? 16,000 plus 1,80,000, that will be rupees 1,96,000. So sir, where shall we give this rule effect? Balance sheet, asset side and trading account credit side by rupees 1,96,000. But sir, what about these 1,000? See, always keep in your mind, stationery stock is also assets. Hence, we shall record it balance sheet asset side as a separate item. I'm repeating, as a separate item, we shall write stationery stock rupees 1,000. And sir, where shall we give the second effect? That is profit and loss account debit side. Whenever you given the information about the stationery stock, keep in your mind, in trial balance, you always be given a stationery expense. Let's see, suppose the stationery expense is given rupees 5,000 and stationery stock is of rupees 1,000. So by what value we shall write in outer column? We shall deduct it and we shall write in outer column 4,000 on debit side. Is it clear? Now question arises, sir, what does it indicate? See, these 4,000 indicate our actual expense on stationery, and these thousands still remain to be utilized. That means we shall use in a next year. Fine. So let me repeat again. Good stock have two effect, by 1,96,000 balance sheet asset side and trading account credit side, and similarly the stationery stock of rupees 1,000 have a two effect, that is balance sheet asset side as a separate item and profit and loss account. In inner column, we say we have already written stationery expense minus stationery stock. We shall write on debit side by 4,000, outer column. So closing stock of rupees, next one is a closing stock of rupees 15,000 having market value 12,000. So In this question, we obviously do not require any calculation. By what value we shall record 15,000 or 12? Rather, we shall record by 12,000. Why? Cost price is 15, but market value is 12,000. So we shall record by 12,000. I am not explaining the effect also here. See, the value of goods closing stock is of rupees 28,600, but the market value of 20% goods is 10% more than the book value. As I have already explained, see, this 10% value is more than the book value. So what we had explained, whenever the value is less, we do not value is less, we require the calculation. But whenever the value is more than the book value, we do not require any calculation. That means when we compare the cost price and market price, whichever is less, so obviously we can identify that the book value 28,600 is less by market value, since we shall record by 28,600. Fine. The value of closing stock is of rupees 40,000, but the market value is 20% less than the book value. So in these questions, we obviously require a calculation. See, 40,000, but the market value is 20% less. See, this is our cost price, or we can say the book value minus 20%. So 20% of 40,000 will be 8,000. So whenever we deduct, we shall obtain 32,000. That is our market price. By which value shall record? 32,000. Do I need to explain the effect? Where shall we give? No. Now, the value of closing stock is of rupees 15,000, out of which 10% and 15% goods have market value less than the book value by 12% and 20% respectively. See, this is very important. First of all, let me write here the overall value, 15,000. Now, these 15,000, out of which 10% goods. So, let our first part at 10% value. 10% of 15,000 will be cost price at a cost price of rupees 1,500. And finally, the second part will be 15%. So 15% of 15,000 will be 2250, we know. But sir, what about the other? Always right. Always right. I'm telling you, 15,000, 10% and 15%, that is 25. So remaining stock will be 75. Sir, how you say you have obtained this 75? See, this value is considered as a 100% value. And both 10% plus 15%, that is 25. So 100 minus 25, that will be 75. So we don't know how much value we shall obtain. With calculator, we shall find 75%, that will be 11,250. But sir, here the value is less by 12% and 20%. So let me deduct 12% first of all. So 12% of 1500 will be 180. So whenever we deduct 180, what we shall obtain? 1320. That will be our market price. And similarly, here it is less by 20%. So we shall deduct 20%. So 20% of 2250 will be 450, and we shall obtain by 1800. Is it clear? So once again, compare what? Cost price, market price. Whichever is less, cost price, market price, whichever is less. And sir, no other information given. As I told you earlier, consider the same value. So what will be our final value of closing stock? So we shall write closing stock is equal to 1320 plus 1800 plus 11250. By making the total of these three items, whatever value we obtain, we shall record that balance sheet asset side and trading account credit side. Fine. Let's move to the next one. See friends, closing stock is of rupees 21,000, in which stock of stationery is 2,000 included. So again, let's make a calculation. 21,000 out of 21,000, 2,000 is for a stationery. So let me show you again. See here, the good stock is rupees 19,000 and stationery stock is of rupees 2,000. So let me show you the two effects one by one. First effect, as we know, this is our goods. Goods is our assets. Balance sheet, asset side. And second effect will be trading account, credit side. And here, stationery stock is also assets. And so we shall show first effect, balance sheet, asset side, and second effect, profit and loss account, debit side, where we have already written stationery expense, say for 10,000, minus we shall deduct stationery stock of rupees 2000 and final amount of rupees 8000 we shall record in outer column. So how many effect we shall give to this transaction? Total 4. 2 effect for 19,000 and 2 effect for stationery stock. Fine. Let's move to the next one. Closing stock of rupees 10,000 out of which 50% has no market value. So let me explain here. 10,000 have two part 50-50%. So 50% and 50%. So 50% of 10,000 that will be rupees 5,000 and 50% of 10,000 again will be 5,000. Now this 50% has no market value. That means here cost price is 55,000 but the market value is 0. So we shall ignore the entire amount and we shall record closing stock only by 5,000 in balance sheet asset side and trading account credit side. Now, the next one and very important, the value of closing stock is of rupees 60,000, out of which the market value of 10% goods is 20% less. See, I'm marking circle here, and the market value of 20% goods is 10% less. Again, I'm marking, and the remaining goods of rupees 42,000 valued at 25% less than the book value. So it requires a rigorous calculations. If you committing a mistake in calculations, again, I'm telling you will not obtain a single mark. So keep in your mind, pause it. First of all, calculate it yourself, make a notes, take a copy pen and write it down and then check it whether it is correct or not. Just so I'm recommending you pause the video and then check it whether your calculation is correct or not. So let's start. 60,000 out of which the market value of 10% goods. So 10% value will be 6,000, that is our obviously cost price, which is less by 20%. So let me deduct 20% value, that is 1200, and we know once we deduct the 1200 from 6,000 we shall obtain 4800 and the remaining market value of 20% goods. So here we shall write 20% and 20% of 60,000 we know that will be 12,000 and which is less by 10%. So we shall deduct 10% value, that is 1200. So what we shall obtain? 10,800. So this is our cost price, market price, cost price, market price. What about the other? That is 42,000. So 42,000 having market value less by 20%. Sir, we don't know 25% of 42,000. So let our calculation take it. Calculate along with me into 25%, that will be 10,500. Shall we add it or deduct it? Obviously we shall deduct it. So 32,000 and 31,500. So again we compare cost price and market price, whichever value is less. Cost price and market price, whichever value is less. Cost price and market price, whichever value is less. So what will be our final value of closing stock? So closing stock will be 4,800 plus 10,800 plus 31,500. Hope this is clear to you. Fine. Now the last and very important questions and most calculation required, that is closing stock of rupees 2,02,000 out of which 2,000 of stock was advertisement goods stock, and from the remaining stock the market value of 30% stock is 20% more and the market value of 30% stock is less by 20%, whereas remaining stock need the repairing expense of 5,000. So this is not a easy questions. You require a little bit calculations and accuracy also. So let's start. First of all, whenever you have been given two kind of information out of the stock of rupees, that is cost price 2,02,000, the goods of rupees 2,000 is purely mint. So let me erase here one by one. Cost price. So let me select. Cost price is rupees 2,02,000 minus 2,000 is purely mint for advertisement, hence final value of goods which available for resale is 2 lakhs. So we shall make a first of all calculation for 2 lakhs. So 2 lakhs, sorry, not a 2 lakh 2000, rather it will be 2 lakhs. So let me write here, out of which 2000 stock was meant for advertisement goods, and stock from the remaining stock will be market value of 30% stock. So from here we shall start 30% stock. So 30% of 2 lakhs will be 60,000, and 30% stock is 20% more. So let first of all add it 20%, that will be 12,000. So what it value? 72,000. This is our cost price and this is our market price. Market value of 30% stocks. So let have the second one, that is 30% stock, that is again 60,000, but value is less by 20%. So let it deduct 20%. So that will be 12,000. So what it will be? 48,000. And finally, what we have been given, whereas remaining stock needs. Now what will be remaining stock? See, 60,000, 60,000, that will be 1,20,000. So 2 lakhs minus 1,20,000, that will be value of 80,000. So out of 80,000, we need the repairing expense of 5,000. So obviously we shall deduct it. So what value we have obtained? 75,000. Fine. So at what value we shall record the closing stock? So closing stock is equal to 72,000 plus 48,000 plus 75,000. After making the total of these three items, whatever value we derived, we shall give the two effect. Keep in your mind. Balance sheet asset side, trading account debit side. But sir, what about these 2,000? See, let me tell you, these 2,000 also required to be adjusted. No doubt this is the stock, but meant for advertisement. Hence, it will be shown as a separate item on balance sheet asset side. I'm telling you, balance sheet asset side as a separate item, 2,000. But the second effect will be on profit and loss account debit side. Sir, by what value is record? Keep in your mind, there will be given a advertisement expense. Let's see, advertisement expense given as a rupees 10,000. So write in inner column minus goods meant for advertisement, that is 2,000. So by deducting 2,000, we shall record in outer column as a 8,000. So is it clear? So how many effects we shall give to enter these transactions? Total 4. First two effect for these 2 lakhs and then 2 effect for this 2,000. Finally, so balance sheet asset side we shall record and trading account credit side, and 2,000 we shall record on balance sheet asset side as a separate item, not along with, by not adding in this one. Rather we shall show as a separate item, and then finally we show profit and loss account debit side as a separate item, not as a separate, rather we shall deduct it from the advertisement expense. Fine. Hope this entire lecture help you a lot to understand the important calculation related to closing stock. And this is my promise to you, once you do the proper calculations along with me, you will obtain a surely full marks related to the closing stock. Fine. See you in the next lecture. Jai Swaminarayan.